Great, thank you.
Cool, thank you guys. Can everyone hear me okay?
Yes, James, 1 second first. Do you see the slides properly, or is it the...
I do see the slides properly, yes.
Okay, thank you. I just want to make sure. Thank you.
Cool, great. Okay, good morning, everyone, and hello from Singapore. It's a pleasure to be here speaking with you on the OnChain webinar. Next slide, please. I'm James Gillingham, the CEO and co-founder of Finex Flow. I'm grateful to be invited today to present to you on the topic of crypto is not so different after all. A little bit about me. I've been managing and executing high-level strategic objectives with more than 13 years of experience in building, developing, and expanding multinational organizations. I have a deep built knowledge of financial markets, digital currencies, and fintech, having started at Close Brothers, one of the UK's leading merchant banking groups, before being headhunted basically to work for International Asset Management, one of the oldest and independent asset management firms in the world, managing $4 billion of funds. Prior to Finex Flow, I founded Jagero FX, a highly successful London-based startup delivering sophisticated automated Forex trading algorithms. Next slide, please. So in the last 3 years, trader demand has seen a range of new institutional type products and services for crypto, very similar to what traders already kind of know. I hope that after this webinar session, you will have a little bit of a better picture of cryptocurrency landscape as I see it, a deeper understanding of Finex Flow and what we bring to the table. The real key takeaway from this presentation will hopefully be that, that Finex Flow understands the cryptocurrency landscape, and with our values of transparency, legitimacy, and trust, provide an industry-leading platform that gives both retail and institutional traders access to the most popular centralized and decentralized exchanges. Next slide, please. This is the agenda of my presentation. To provide an overview of what are the touch points. Diving right in, the cryptocurrency industry market value and potential growth. Next slide, please. Thank you very much. The total market cap of all cryptocurrency now actually stands at $2.48 trillion. This has actually doubled from less than 1 trillion in only the past 2 months amid surging institutional demand. Though it seems to be sudden growth, only within the past 2 months, this gain in momentum had started since the beginning of 2020, when many Western institutions began investing in this new asset class. So essentially, Tesla, Facebook, PayPal, Visa, MasterCard, many hedge funds, and even family offices have shown an increased appetite for cryptocurrency as a hedge against their more traditional investments. With these institutional giants coming in to support the adoption, I really believe that we are still at the beginning of a major upward trend where cryptocurrency will become a world-leading asset class. In fact, the global cryptocurrency market is expected to grow at a compounded annual growth rate of 30% year on year from 2021 to 2026. Bitcoin has not just become a trendsetter, ushering in a new wave of cryptocurrencies built on a decentralized peer-to-peer network. It's really become the de facto standard for cryptocurrencies, inspiring an ever-growing legion of followers and spin-offs. Now, this is really evident as there are more than 4,000 cryptocurrencies in existence as of January 2021. While many of these assets, some enjoy immense popularity amongst dedicated communities of backers and investors. Beyond that, the field of cryptocurrencies is always expanding, and the new digital tokens that are released every single week. Whilst Bitcoin is really widely seen as the pioneer in the world of cryptocurrencies, analysts evaluate Ethereum due to the ERC20 tokenization network. New tokens are usually on the Ethereum blockchain. Traditional financial companies are ramping up cryptocurrency offerings as digital assets mature and soar in price, creating demand. Now, Morgan Stanley was the first big US bank to offer its wealth management clients access to Bitcoin funds. JP Morgan also followed suit, becoming the next and least likely US mega bank to embrace cryptocurrency as an asset class. JP Morgan's Bitcoin fund could roll out as soon as this summer, and both banks are offering Bitcoin funds by Galaxy and NYDIG. Next in line, as you can see on the slide, Citigroup, one of the world's largest foreign exchange trading banks, is considering taking its first steps into cryptocurrency market after a surge in interest from clients. In March this year, actually, Citi issued a 108-page document noting that despite a host of risk and obstacles that stand in the way of Bitcoin's progress, the cryptocurrency may be optimally positioned to become the preferred currency for global trade. Clearly, Bitcoin is taking strides towards mainstream adoption. Banks are enabling the buying, holding, and the selling of cryptocurrencies through their existing accounts, with Wells Fargo as the latest US bank to jump on the bandwagon. Now, most people can't invest in assets that institutional investors normally take advantage of. With cryptocurrency being made available through retail banks and able to be purchased for as little as $1, now the masses have an attractive asset that's available to be owned by anyone in essentially any amount. That's huge for the economy, its growth, and obviously stability. And here in Singapore, DBS's private bank has started Asia's first bank-backed trust for cryptocurrencies. This is all due to the demand of digital assets increasing. This builds on the DBS Digital Exchange, which was launched last December. It offers trading and custody ecosystems for all digital assets. It also allows institutional investors fully integrated tokenization. It is clear that there is a lot of excitement in cryptocurrency investment, but it's not only for institutional traders, but also for retail traders as well. I really like this quote, is what you can see here by Charles Lee, creator of Litecoin. It is true that the potential for cryptocurrency is limitless and that we are seeing a trend of mass adoption. Next up, trader demand and institutionalization. In the last 3 years, trader demand has seen a range of new institutional type products. These products are very similar to what traditional traders already know. Now, institutional buying started when Bitcoin's price was as low as around $19,000 US and continued well past the $40,000 mark. Despite Bitcoin trading near all-time highs, new institutions continue to buy Bitcoin, and they're using over-the-counter trading firms to keep their purchases from impacting price. The big question is, what does it all mean actually for Bitcoin? Now that institutions are surging into the asset class, this is now bringing huge capital inflows with them. Looking now at one of the latest institutional purchases that actually caused a super huge buzz. It happened just before August 2020, when US listed MicroStrategy announced a $250 million investment into Bitcoin. Many other institutions also came forward publicizing that they had been buying irrespective of price rallies. With such large investment, volatility really increased from its normal levels. The really key and big takeaway and challenge is unchecked market manipulation, borderline market abuse, and internet groups and influencers who largely remain outside the grasp of regulators. This is also causing huge volatility. Just one example how easily external factors can influence crypto markets is Twitter. Tesla chief Elon Musk tweeted, and that tweet had the capacity to move markets and change investor sentiment. His tweets had led directly to multiple spikes in cryptocurrency prices. Many of you on this presentation probably know Dogecoin. It actually jumped 35% in less than 24 hours due to one of his posts. In light of this, institutional crypto traders are finding that managing risk is unlike risk management in any other asset class. Access to fundamental and technical analysis, real-time market data, and ultra-low latency networks, combined with strong regulatory environments, give them an edge over the retail participant. Ultimately, there needs to be a fair playing field for both institutional and retail traders. This is so that both have their interests met, which really brings me on to my next point. Why Finex Flow? So at Finex Flow, we believe in a fully accepted cryptocurrency mainstream built on the values of transparency, legitimacy, and trust. Now, we aim to create a level playing field with market distortions and unfair trading practices eliminated. We provide the best prices available to traders, irrespective of size or location. Moving on to trust, we uphold coding best practices. At Finex Flow, security is not viewed as a protective layer, but actually goes to the platform's core. In addition, all actions are recorded for auditing and traceability purposes. We also have risk monitoring, vulnerability management, malware prevention, fraud detection, and external security audits. Reliability. The aggregation of the world's most liquid exchanges and DeFi protocols ensures that each trader has access to Finex Flow's smart order routing. This means that when traders execute large orders, Finex Flow's smart order routing algorithm takes the best price from any exchange and executes automatically the child orders at top of book. On to transparency. The platform allows the use of trading tools, which in traditional markets are available exclusively to institutional traders. This also allows for the best execution and consistent entry and exit signals. On top of the three pillars of trust, reliability, and transparency, we have a unique value proposition as well. Finex Flow is the world's first hybrid liquidity aggregator that utilizes smart TWAP and VWAP algos. The platform has full dark pool functionalities for all trading, all within one account, one wallet, and one KYC. We provide access to multiple exchanges without the need to open up multiple different accounts. We have created an industry-leading trading platform that provides both retail and institutional traders with access to the most popular crypto exchanges. Here you can see a plethora of challenges being inhibited to both the retail and institutional traders in the cryptocurrency markets today. As you can see, there are multiple accounts, multiple interfaces. There are both real big challenges in both the decentralized finance and the centralized finance for crypto markets. Solutions to decentralized finance. So Finex Flow platform, it provides users with access to multiple protocols through one registration, connecting the dots for users and virtually guaranteeing the best prices and rates available through Finex Flow's advanced aggregation engine. So onto the centralized finance, so the more centralized exchanges. We also provide immediate trading access to multiple exchanges through one account. This is tier 1, tier 2, and tier 3 exchanges. We also automate best price, and we have best price discovery, institutional-like trading fees, and access to the deepest liquidity. With one registration, one KYC, on one wallet, trading cryptocurrency has never been simpler. We like to say continuously the mantra of one account, one wallet, and one KYC. What that essentially means is, in essence, you can trade our platform to interact with liquidity opportunities on various exchanges. We solve the problem of traders currently needing to sign up to dozens, if not almost 50, 60 different pools of liquidity with various different access points, logins, passwords, and multiple private keys. Your coins and tokens will be securely held off exchange by world-leading regulated third-party custodians. This is really important in light of recent events where assets could be held on exchanges and you have to wait until the exchanges are back online for you to be able to withdraw your funds. Over the past week and a half, there's been extreme market volatility, and most tier 1, tier 2 exchanges actually went offline for a significant period of time. Our platform enables traders to trade across 1, 2, or even 4 markets simultaneously. The tech is also working around the clock. Our tech team's working around the clock to deliver the best and most seamless user experience, making our user interface extremely simple to use. We've also had liquidity providers join our network and many potential partnerships. Currently, we are proud to have 8 liquidity providers with us. These also include many tier 1 exchanges, many of you would have probably heard of: Coinbase, Binance, FTX, Huobi, etc. And there will be many more to be announced very soon. So this is a very quick snapshot of our liquidity providers. We have more coming on board in the coming months. Beside liquidity providers, the reason why we're all here is that we are also have OnChain as our key custodian, and we are very excited for this partnership, and it's kicking off right now. Users can trade cryptocurrency assets securely and in peace of mind, knowing that they are covered by a Singaporean regulated custodian. Lastly, a pipeline of what's really in the works for Finex Flow moving into Q3 and Q4 of 2021. So here is our roadmap. As you can see, the bullet points really highlight our major milestones, and there's obviously incorporated in this the more highlighted actionable items in Q2 and Q3, which is really our most excitement key milestones coming up very shortly. So for my final slide, I'd like to leave all of you with a quote from Ben Bernanke, the former chairman of the Federal Reserve. The exponential increase in trader demand over the last few years has seen a range of institutional type products and services appear for all cryptocurrency market participants. As the world's first hybrid liquidity aggregator, Finex Flow echoes Ben's sentiment and is working towards a secure, trustworthy, and transparent platform that gives both institutional and retail traders access to the most popular cryptocurrency exchanges in a regulated, safe, and secure environment. So now I'm happy to take any questions with regards to what we are currently doing.
James, thank you very much for your presentation and your passion for the asset class too. As we were discussing earlier, I know we both have been in the system for a while and have seen it evolve a great deal. I mean, just for you personally, what has been most exciting and impressive in your view of the whole crypto ecosystem since the time you started watching to today?
The most exciting evolution, or the most exciting parts that I've really been really excited around is essentially the new adoption and institutions moving into the space. The fact that before it was, it was meme town, there was crypto people that were essentially dictating to the markets, the market movements. It still happens to a certain extent today, but having the major institutions around the world, the key banks, the key investment banks, before way back 2015, 16, 17, you had people like Jamie Dimon that were saying, oh, it's not an asset class, it's irrelevant, none of our clients are ever going to get involved in this. The last year and a half, that rhetoric has totally changed. So that real evolution of messaging from the major institutions also means that people like Goldman Sachs have come out and said, actually, cryptocurrency is its own individual asset class. So that really gives a lot more validity around something that we've been striving towards during the entire time that I've been involved in cryptocurrency, which is adding legitimacy, which is adding security. People like OnChain custodian, for instance, it's extremely important after all the hacks and all the nefarious activity and private key issues and all this kind of stuff. These kind of custodians are really, really needed in order to tidy up the marketplace. And then obviously, once the marketplace has been tidied up, it will then, there should then be an influx of further retail investment. There should be an influx of further institutional investment. So that's what we're really aiming for, is trying to get mass adoption. And, it's really trying to change the general messaging or thought process, because when you speak to even today, 20-30% of the general public, you say, oh, cryptocurrency, and they still say, oh, it's for scammers, it's used for nefarious activity. And I really have been working hard to strive to change people's viewpoint on that. It's changing, it continues to change. The institutions are obviously seeing the opportunity that's involved. The greatest thing with crypto, and especially Bitcoin, is essentially that it's an asset where we have a closure. So at 22 or 21 million coins, that's it. There's no more available. It's like no other asset class. If you look at art, if you look at diamonds, if you look at gold, you can keep on excavating more and more and more and more. But once we reach that benchmark, there is no more available. So where is the price actually going to go then? Nobody really knows. So that's what really makes this asset class so exciting.
No. Well, thanks for sharing your passion for it. And I want to pick out one thing that I think is really important in the work you do and on-chain as well. You mentioned private keys, yes, right? Would you mind, especially for those new in the space, what is a private key? What is a public key? And then if you're comfortable, you may want to share kind of Mt. Gox, what happened there, and why it's totally different, or how standards have changed around private keys and public keys.
Sure. So your number one, for anybody that's on this particular presentation, your private key is essentially, in essence, private. It should always be kept private. You should never, ever disclose this to absolutely anybody. In our Telegram group that we have a number of people that actually go into newbies and say, hey, can you give me your private key? Your private key is essentially your gateway, your access to your cryptocurrency, where you're able to transfer your coins and your tokens to other wallets essentially, right? So if you're handing out your private key, it's like handing me your wallet and giving me your PIN number to your ATM card, right? You're never going to do that. So never, ever hand out your private keys. Now, something that's very important for the custody of private keys and the safekeeping is having essentially a custodian. Now, when you have your private key, normally you want to store it somewhere. So most people say, oh, I'm just going to write down my private key. Okay, so you write it down. I totally advise against this, right? Don't write down your private
on a sticky note. I'll put it over there in the cabinet, and I'll come back to it in 3 years when I want to sell my crypto, right?
Do not put it on a sticky note. That sticky note could be lost. It could be misplaced. It could also, if you write things down and come back 3 years later, the actual ink could no longer be readable, visible, and then essentially you've lost access to all of your crypto. Okay, now what we have, or what I suggest to newbies is that there's Amazon. They have these metal plates, and these metal plates are easy, where you can actually you pull off the alphabet, or the passcodes and the various codes that you require, and you can put that into a metal plate where essentially you're totally safe, and you're able to retrieve your private key if required. All right, so number one. Now, with regards to the custody, you want to make sure that your private keys are always kept safe and extremely safe. So that's where a custodian like OnChain really comes in. The private keys will be kept within the OnChain infrastructure, so it's kept safe and secure. There's also multi-layers in order to access and get into the custodian. So that also means that due to their regulation, they have to be penetration tested. There has to be code reviews, so you know that if there's any kind of hackers that are out there trying to find your private keys, that they're safe and secure in a custodian such like OnChain. Now, what happened with the Mt. Gox issue was when I was back in 2012, 2013 was when I was first introduced. I had no idea about crypto. I had no idea about cold storage, hot storage, warm storage. None of this even really existed back then, right? It was just, okay, I'm just going to hold my coins, my private keys, and they're all going to sit within the Mt. Gox infrastructure. So they were all sat there. Mt. Gox was essentially an exchange. It was where you was able to buy the coins. That's what I did. I bought them. And then what happened was that there was an internal breach, I believe. That's what happened. So internally, the people that were owning or running the actual exchange, they had access to everybody's private keys. And guess what happened? When Bitcoin really appreciated, somebody sat there and said, "Oh, I've got access to all this free money. So all I'm going to do is transfer these coins into my wallet, and I'm going to disappear." And that's essentially what happened. There are a lot of very, very angry and upset people. However, it was a fantastic learning curve for somebody that was so new into cryptocurrency. I was always looking for, off the back of that, I was looking for a way of making sure that my private keys are secure, safe. And now with, as what I mentioned before, with OnChain custodian and key strategic partners, this is now totally possible.
Yeah, thank you for that. And the way I think of it is that was a huge warning call to the whole community on, it wasn't that crypto was bad. It actually worked so well that it transferred immediately as it was intended to do, but there was a governance issue on top of it. And because of the poor governance in that institution, there was much more regulation coming in. And now there's been this dance over the past number of years for better best practices, and also the merger of the technology community and the traditional banking and money transfer community working in concert with regulators to make this more investor friendly. I mean, is that more or less how you would sum it up as well, James?
Yeah, I would really say the last couple of years has really seen like the technology really evolve around custody and not only custody, but various different areas of cryptocurrency that really needed to develop. So it's really interesting to see the space really grow, and I feel as though, obviously, after my own painful experience, that it's super important to have the technology and the amalgamation from multiple different areas all coming together and solidifying the entire industry and protecting everybody, essentially.
Yeah. Well, thank you very much. We'll take, there's one question in the chat. If anyone else has a question too, happy to address that before James wraps up. I want to acknowledge Tanmai, who's here now. He'll be next up, so thanks for being early to class. We appreciate you, and thank you for listening in. James, one other thing I hear in that is you were stung hard early on, yet you were still in the ecosystem, right? Yeah. And I mean, I personally was the subject of a SIM swap where somebody posed as me, had a new SIM card issued at 3 in the morning, and then they use that for two-factor authentication to get to where they thought my crypto was. It was not where they thought it was, thank God. But that goes back to kind of governance, and even in your, if you have a Charles Schwab account or HSBC account, where you keep your passwords, you updating your passwords regularly. There are bad actors out there that will try and break into traditional assets just like they will into crypto. And so you want to make sure your own personal governance structure, if you're an institution, a family office, asset manager, your governance structure is pretty tight. And just like James said too, with any other custodian that's doing routine tests and whatnot as well, the whole system has evolved. At the same time, you really need to be careful about that aspect of your interest in crypto, right? So, James, one question here that came up is, what, in your opinion, what are the differences and similarities between the crash that effectively happened this past couple weeks, crypto off 50%, right? And you can talk about Elon too in that if you like, and back in 2018, kind of January 2018 was the previous peak. So what were the similarities and the differences between these two corrections?
Sure. I mean, look, if I take a step back from the question, right? So if we actually look at the market participants, so back in 2018, it was a retail market. There were a few institutions involved, but still they were kind of viewing from the peripheries, from the edge. They weren't really involved. So what generally happens where you're working within a purely retail market is, as soon as things start to slowly sell off, everybody sells off. So from peak to trough, we're around 18, 19, 20, I think, thousand per Bitcoin, and we went back down to 4, right? So it was more like an 80, 85% sell off.
Yep.
So then if we feed that into the 2021 sell off, I don't really like the word crash, because it's not really a crash. Crypto, during the cyclical environment of crypto, there's always been these kind of bullish 3 to 6 months, and then all of a sudden there's a huge correction, and then these kind of cycles have continued to happen. This sell off, the one recently in the past couple of weeks, it was only 50%, which in most markets you'll be saying 50%. Oh my God! But in crypto, it's actually, I was like, oh, okay, it's only 50. I'm pretty happy with that. Especially now we found the price floor, and due to the blockchain monitoring, back in 2018, if you're able to look at the actual real numbers and like what was mentioned before with Bobby talking about hodlers and what we class as the wows, the guys that are holding a lot of Bitcoin, right? Back in 2018, there was a lot of people that cashed out a lot of money, and they essentially, it's market manipulation. So they're trying to drive the price down as far as they can, scare the major retail guys out, drive it as far as they possibly can, and then buy it all the way back up. It's similar to what's kind of happened recently. However, the sell-off was only 50%. The kind of buys that we've been monitoring and seeing coming in at the 40,000 level and the 30,000 level has been huge, astronomical. Because right now, like as what everybody says, buy the dip, right? And this really, the 30K level was kind of the lowest that it's going to go, and now we actually see a lot more kind of bigger buyers coming back into the market. As I mentioned before, there's a lot of huge amount of OTC deals going on right now. The OTC deals themselves don't have an impact on the market, because an OTC deal is you're essentially going to an OTC market maker who's holding a bunch of Bitcoin in their treasury essentially, and you're going so it's an off-chain transaction. You're not actually you're not going directly to an exchange and purchasing via an exchange. So that's also where this market also kind of sets itself apart to most others, where there's a lot of OTC deals that are kind of going on, and people are not really able to view it. So even though the general price has kind of dropped, there's still a lot of players right now, especially the larger institutions, that are really buying and buying a lot, because they all see this as a fantastic buying opportunity. So that's why I've also been buying as well.
Yeah. All right. Well, thank you for your passion, James, and the thoughtful answers you have. Before we and we'll take just a 2-minute break at the end of this, just to kind of get set up for the next slides for people too. But in closing, James, in thinking about the people that are newest to the asset class on this call, whether they're a family office, advisor, individual investor, what would you leave them with, given your experience on how they can make sense of this asset class and whether it's right for them or not? No pressure, but what would you share with them?
I'd say, first of all, I would acquire knowledge. I would certainly ensure that you're very, very cautious, extremely cautious. I mean, I've had, as what's been mentioned, people have been trying to impersonate me. They've created fake accounts. They're reaching out to people asking for crypto and like crazy stuff like this. So you do need to be very, very careful moving into this particular industry. However, once you acquire the knowledge, I would say start off very slow. Don't start like liquidating your entire portfolio in other assets and then going, okay, I'm going to go 100% into crypto, but also be aware of volatility. Volatility is obviously a double-edged sword. There's fantastic upside, but also fantastic downside. If you're able to get in at the right time, then it's an amazing opportunity. As well as if your view is not trying to day trade this, because I've met a bunch of day traders and algo traders that really do take advantage of these kind of things. But if you're more of a, I would say it's easier to trade crypto if you're a long-term holder. So if you're holding this with a viewpoint of 1 year, 2 years, 3 to 5 year time horizon, you can virtually guarantee an amazing return, a better return than what you'll get in probably any other asset class. But I would just say moving cautiously, make sure that you're dealing with regulated entities as well. So right now there are a bunch of regulators around the world that are regulating it, whether it's in the US, the SEC and FINRA and this kind of stuff, or even in Europe, you've got Japan, you've got Singapore. So try to look more out for the regulated entities, and also be aware that there's a lot of decentralized opportunities and centralized opportunities. So you really need to delve into both markets, do your analysis, do your assessments, and then just slowly try to grow your portfolio with people that you trust, and then ultimately keeping your private keys and all of your information safe and secure.
Great. It's that easy, right, James?
It's that simple.
All right. Well, thank you, my friend. Really appreciate your presentation and the exchange that we just shared.